Hi, my name's Jenn Baker. Thank you for taking some time to tune in so that we can talk about the power of getting to the 0% tax bracket in retirement. Why does this even matter? Well, it doesn't if you enjoy paying taxes. But if you want to talk about some strategies that can lower the overall amount of taxes you pay, that's what we're going to talk about tonight. The 401k is the most popular vehicle for saving for retirement. What this means is you get a tax deduction now, and later when you take the money out, you pay taxes. So if you think about it, you're really in a partnership with the government. But unlike any other partnership out there, they can change their ownership percent whenever they want. So you may think that whenever you withdraw your money, you're going to pay 30% in taxes and keep 70%. But what if it's reversed? What if you have to pay 70% in taxes and only keep 30%? They couldn't really raise taxes that much, right? Maybe. Let's look at history. If we look back over history, we can see that the top tax bracket has actually gotten up to 94%. Right now, we're in a low tax environment, and with the new tax law in 2018, they've cut taxes again. But what we know from history is that it tends to repeat itself. We can also look to someone who knows a little bit about the state of America's finances. David Walker was the U.S. Comptroller for 10 years, so he was basically the CPA for the government. And he looked at all of the books, and he said he had a 4-letter word that explained why taxes were definitely going to go up. Math. So it doesn't matter if it's Republicans or Democrats, someone's going to inherit a math problem. What is this math problem? It deals with the mandatory expenses that the government has. So think about your mortgage or your utilities. You have them on auto pay and they just come straight out of your account every month. The government has some of those too. Things like Social Security, Medicare, Medicaid. Let's look at Social Security, for example. It started as a program that was going to last forever. Had 42 workers paying in for every one person taking benefits. But fast forward to today, and there's 3 workers paying in for every one person taking a benefit. Then we look at Medicare and it's 5 times more expensive. So these mandatory expenses are growing, and they're a bigger and bigger part of the budget every year. What is the answer? The answer isn't complicated. There's really 3 things the government can do. They can either restructure the obligations that they currently have, they can cut spending, or they can raise taxes. So it's not a problem of trying to figure out what the answer is, it's who's going to do something about it. Why hasn't somebody done anything about it? Because we live in America and we have elected officials. So that means that if they want to keep their job, they can't do things like raise taxes or cut grandma's Social Security check. It's the best kept secret in Washington. Everyone knows about it, but no one wants to be the one to step up and do anything. So they can continue to kick this can down the road for a while. How long? Not sure. But what we do know is that at some point, the mandatory expenses plus the interest on the debt they have to pay is going to exceed the revenue coming in, and they'll have to raise taxes. Let's look at a cartoon. Everybody remembers Wile E. Coyote and the Roadrunner. So there was one episode where the coyote was in his office and he was trying to make a bomb to finally get the Roadrunner. But what he didn't know was the Roadrunner had pushed his office onto a train track. So he looks up and he sees this train coming straight for him. So what does he do? He pulls down the shade. Unfortunately, that didn't help and he still ended up flat on the track. We also have a train coming towards us. It's in the form of higher taxes. So we can either pull down the shade or we can get off the track. To get off the track, that means you have to get yourself in the 0% tax bracket. That's the power. Because it doesn't matter if taxes double or if they triple, because 0 times 2 or 0 times 3 is still 0. To get to the 0% tax bracket, we have to look at your retirement savings in buckets. There's 3 buckets: the taxable, the tax deferred, and the tax-free, and I'll go through each one of them. The taxable account is anything that you get a 1099 from at the end of the year. So think about your savings account, your brokerage account, CDs that you have. The amount that we want to have in this bucket is 6 months worth of expenses. This is your emergency fund. Your tax deferred bucket is anything that you get a tax deduction for now and pay taxes later when you withdraw the money. So your 401k, your 403b, your traditional IRA. And this is where everyone tells you to put the money in these accounts because you'll be in a lower tax bracket in retirement. The problem is, at some point the government makes you take money out of these accounts. So at 70 and a half, they require you to take out a certain amount. And they're pretty serious about it. If you don't take out the right amount or you forget to take it out, they're going to charge you a 50% penalty on that money. So what happens is, as you are required to take out these distributions, you end up in a higher tax bracket. And then your Social Security ends up taxed. And you end up paying higher Medicare premiums. So it ends up being a tax torpedo. So the amount that we want to have in this bucket is only the amount that when you're required to take the distributions, it's offset by your standard deduction on your tax return. The last bucket is a tax-free bucket. So these are things like a Roth IRA or 401k, where you pay the tax now, but the money grows tax-free, and when you take the distributions out, there's no tax due. There's also a provision in the tax code that allows life insurance, death benefits not to be taxable. So companies have used this tax code and they've created products around it, where that way you can use the tax-free death benefit while you're alive in retirement. So this is a way that you can structure the product to create a tax-free income source in retirement. So you may think, that all sounds great, but I don't even know where to get started. That's where I come in. This is what I do. I sit down with people and I create a roadmap so we can figure out how to take what you're saving and make sure it's used efficiently. I like to walk you through the whole process. We'll create a plan. You don't have to do this alone. Now is the time to do this planning because taxes are on sale. As of January 1st, 2018, there was a tax cut that lasts all the way until 2026, which gives us 8 years to plan. So I know the numbers on this slide are a lot, and I don't want you to look at all of that, but what I want you to know is that we have a very special opportunity where we can come up with a plan, because this is not to be done in 1 year. We need to figure out the proper amount each year to shift so that you're not paying more taxes than you need to be paying. We talked about Wile E. Coyote pulling down the shade when he saw the train coming. And I know it's easy to do when things are uncertain and you're not really sure what to do next, but don't do that with retirement. We need to make sure that you are on the right path and that you're able to have a relaxing retirement instead of stressful. Now's the time to sit down and try to figure out if you're on the right path or what we need to do to get you there. Your retirement is important. Please take the time to make sure that you have the best one you can. The next step is for us to set up a 15-minute video conference. That way I can answer any questions you have and we can talk about your specific roadmap.